Good evening, everyone. Big Chets. Sorry for that little time lapse in getting things started. As always, it's something simple, that's right in front of me. And that's what it was. I called my good friend Big Chonas, who's at Big Chonas on Twitter, and he's like, "Yeah, we figured it out in about 3 seconds." So here we are. I'm glad you could join me. I don't do YouTube shows that often. But when I do them, I like to interact with you. That's why I've asked you here. I would say, I'd love to hear your feedback, like to hear what you're thinking. And a big part of this is I want to do an Ask Me Anything, for Japanese Candlesticks. So, definitely fire out your questions on the candlesticks. I'll try to talk about them a little bit more. But really, that's what this is about. We can do kind of a quick. Let's just kind of go outside in. We'll work our way in from a weekly chart. Let's just kind of start with the candles right now. So where are we at on the weekly chart? So we're on Coinbase here. And if you can hear me, just let me know. Should be able to hear me okay. Just confirm in that chat room. Yeah, I missed the old music too, Cornholio. I'm going to fix that. I'm just been kind of switching up setups. And I had great music. Just for some reason, I'll get on that. I promise you, I will get on that. Actually, maybe I have it here. Why am I teasing you so much? Let's see. That's the music. There you go. I will definitely bring it back for the next time. Sorry, I haven't been doing that. So right here on the weekly chart, you can see essentially where the price is hanging out right at that lower Bollinger Band. So we have to respect the fact that the price, generally speaking, this is not just a steadfast rule. Generally speaking, the price will travel between the Bollinger Bands. When it's a bullish advance, you're going to be riding above these exponential moving averages. I have the 8 EMA, which I use. I use the yellow line, the EMA 34. I use the Bollinger Bands. And you can see the brown line, that's the MA20, SMA20, middle Bollinger Band. And right here also the blue line, the 200 period moving average as well. So essentially right now, I'm looking at it. I see moving average starting to bear cross, but not yet really. There's no 834 cross. Which is what I primarily look for. On the weekly chart, we have the 834 bull cross around 5K in April. The last time that happened, the last bull cross is back at the end of 2015 when the prices were around $270. So I've been watching that, tracking that moving average cross. We had the bear cross back in May, May 2018. What do I mean by that? Right there, the 834 bear cross. You say, Big Chad, you're already as big, as Big Jonas loves to point out, you're already like $100 off the top or $100 off the bottom. He's trying, he's so precise. Yes, you're already plenty of the way down, but if you use that, there's a pretty good bear follow through on that 834 bear cross, right? So we have to give some respect to that 834 bear cross. And so we had the bull cross here back in April. And we're seeing essentially how the price responded to that. The price had a nice advance. Ended up, essentially busting right through the upper Bollinger Band. And you put in this gravestone doji, potentially a shooting star. It's not a true doji because there is a real candle body. It's a small real candle body. So you could argue, what am I talking about? So let's do that first. Let's show you what a gravestone doji is. So this candle here, so the bull's advanced. There's a couple things to talk about here. So the bull's advanced after the 834 bull cross, and we see the price moving outside of the standard deviation, kind of a too fast, too soon. Either it happens bullish, it happens bearish, it happens the same way. And you can see after that, the bears rejected higher prices, right? And you put in that long upper shadow, that long upper wick. Now, technically, now you with a gravestone doji, you're going to have a doji as there is no real candle body. In theory, you can have up to 5% of the range of the candle to qualify as a doji, but there's a little bit of fluidity in this, okay? Especially with crypto, where there's no real opens and closes. What's the difference? This is technically a spinning top. A spinning top is not always equal upper and lower shadows. It really just means a small or a diminutive candle body, right? So this is either a gravestone doji where you have the doji, or it's a shooting star, right? Or it's a shooting star with the spinning top, right? But furthermore, it doesn't matter as much as you can make it even more basic. You can say, what's important to me is the fact that I see upper shadow. And those upper shadows were above the upper Bollinger Band. And what that tells me is kind of it's almost like when you go to the beach and you can see that the water's receded, and at the high water mark, you can see it went there too fast, perhaps. Maybe a better example would be like a wave crests and it hits like a stone, like a wall, really high on the wall. And you think, oh, wow, the water went all the way up there. No, a splash. It splashed in the wall. So it wasn't the whole volume of the water. And it's a kind of a movement too fast, too soon, as I said already. So it's not as important to be a shooting star or a gravestone doji how you're naming it. But if we're being technical, if we're into Japanese candles, we understand what a spinning top is. We understand what an upper shadow, a lower shadow means. Lower shadow being bullish, upper shadow or an upper wick. Now you say, Big Cheds, I see this little shadow on the bottom, right? It's not what's called shaven bottom. A shaven bottom is when there's no lower shadow. All right. And a shaven top is when there's no upper shadow. So I get a little bit of cheeky. Let me see if this is what I'm looking for. Here we go. This is all I have, a shaven head, right? Shaven head or shaven top. A black or white candlestick with no upper shadow. And the same thing for shaven bottom. So I get a little cheeky sometimes. I've done some polls with fake names, and people are like, always think like shaven top is fake or shaven bottom, right? There's a lot of funny names like that. But so you have this candle, and why I'm talking about this candle is several reasons. It comes after the 834 bull cross, and we have just such a violent move, above the upper Bollinger Band, and it kind of marks. Elliott wave traders will probably, this will be whatever fifth wave extension, whatever you want, whatever it is. This is your the end of the fifth wave, from what I understand, right? It's the top. It's the top of the channel. It's a swing high. And that's why we're focusing on this candle. In addition, it's an interesting Japanese candle, right? Because it could be the gravestone doji. It could be the shooting star. We have the shaven bottom. And you have where it sits in play. It sits in play like above the upper Bollinger Band. You don't get a ton of action above it. You do here. But these are just kind of standard advancing candles. You could argue, you can argue actually have slightly smaller real candle body sizes leading to the doji. So that's kind of a general principle as well of when you're trying to measure force. I mean, you can see it happening right now in this week. Any kind of trend, I make the analysis. By the way, I'm one of the founding analysts on Bitcoin Live, best in class educational platform for crypto. And in my video, and we'll talk about that later. In my videos, I often talk about you want to go from like red light to orange to green, right? So you have to force that downtrend first, and that's what you kind of see. I'll answer your question in a moment, Carlos. So when you see essentially, it's like red light, orange light, green, and what you need, so you have like big red candles, right? And then you have maybe smaller red candles, and then you have like a spinning top or even a doji. That's almost like the bear force. It's almost like the car that runs into the wall and then it crumples up, right? You see those crash test dummy videos or whatever. I mean, that's what you're looking at. You can see that here. That's something interesting as well. You see the biggest, a little smaller. So by this time, right, you're looking to start taking profit, albeit it did pull back to my favorite moving average, the 8 EMA, the green line. You can see how well and how true that was for the uptrend. Certainly we had our true break here, and then you would say, breaking these lows of this spinning top right there, that would have been like a big, that would have been maybe where you're getting out. Other people wouldn't gotten out early, just based on kind of the end of that initial push. But really, like I said earlier, it's this candle. So you always start with whatever candle is the biggest volume, and this is kind of running the show. So from this week, you could predict several, it's a general concept, candlestick theory. The best entries come not from the initial candle, perhaps, but from the retest of the candle. All right. So so what do I mean by that? Let's pick. What do I mean by that? So let's take like a hammer. You know, hammer, right? It's not a dragonfly doji. Right? It's not a dragonfly doji. The dragonfly doji with the doji. And by the way, the plural of doji is doji, D-O-J-I. Hammer. So the best, say you have a hammer candle, and you'll see this all the time. And I could go find an example, but you'll find it as soon as you start looking. So you have the hammer candle, you have the bounce, and what they don't show here, essentially in this little image, is what happens is, okay, you run into resistance. You already see this resistance here. You already see the upper shadow. See how the upper shadow is growing too, and they're kind of alluding to it? You have the rejection, the pullback, and then you retest the support range of the hammer. So the best entries come from the retest of the reversal candle's support range. That's such a key concept, right? So how many times have you jumped in after, oh, it closed, the hammer closed, it confirmed the close, it closed above the close of the hammer. Oh, wow, you're already up here. You're getting nervous, you break out, you sell when it breaks here. If you're patient, maybe you take some profit or whatever, but when it comes back, you want that discount entry, and you're looking for entry on the retest. So I think we saw that in Bitcoin. Let me just see recently. There we go. Right, so look at, there it is. I mean, 100% what I just said. So obviously you have the single, double, triple bottom potential here, Three Rivers bottom. You have arguably what we're talking about. It's really Dragonfly Doji. It's not you're not so much a hammer. It's definitely Dragonfly Doji for me. Even with the lack of a shaven top, or the lack of a shaven head, right? In theory, you see how the Dragonfly Doji has the shaven head. All right, this candle in question does not, but it's essentially the same gist. It's very small. Upper shadow is okay. Right? So this candle, I'm kind of rambling on, but the point I was making is this candle, the support, look at that entry. It bounced, ran in, it's like almost the same as this photo. Where's that photo? That's kind of crazy. Never noticed that, right? So this is this reversal right here. And right, so the price runs into the resistance. So this area here is just like this area. Right? Bounces and runs into prior resistance, right? It hasn't gone away yet. It hasn't been broken. And you pull back to support. They should show that. Right? So that's what you get. You get your entry. This is a great general principle. If you find that you suck with entries and you're always chasing and you're always like, I can't believe I jumped in, I should have waited, all that good stuff. You wait for the retest of support, right, in that case. Or if you miss your short entry, don't kind of jump into it. Wait to kind of fade the strength when it bounces back. It's the exact same concept, right? So, just kind of, we kind of backdoored right into Bitcoin here in the 12-hour. We'll take a look at it. I'll quickly answer the question from the chat room, and I want some questions, because I want to hear any questions about Japanese candlesticks. I can just ramble on and show you random things with no kind of whatever, but if you have any questions, now is the best time to let me know. So, do I believe in Elliott waves? Couple thoughts. The fact that other people believe in Elliott waves suggests to me the market will reflect that. What do I mean by that? In that those people who do believe will kind of adjust their buying and selling accordingly. So yes, I believe in that sense. I believe in Elliott waves at a minimum. I haven't studied them well enough. For me, I kind of think the Elliott wave is representing just kind of an ebb and flow of a price movement that I kind of intuit. That I just generally intuit because I expect it's an ebb and flow I'm used to, and that I kind of I feel I have a somewhat of a pulse on, or kind of the general principles of an ebb and flow type of market. So I would never I have no idea how to use Elliott waves other than to watch Big Jonas use them and then kind of ask him hopefully not dumb questions about Elliott waves. So that's my answer to Elliott waves, Carlos. Bitcoin Lobby Twitter, you're very welcome. You want bullish hopium. So for Bitcoin, I mean, you have potential for higher lows. You have the double bottom and then arguably a higher low, your tweezer bottom here, October 7th, 6th and 7th. But you haven't proven anything because you have a kind of a well-established area. of resistance. You haven't established you can break through it. You're trading below the EMA 34. Bears are clearly, you have to give bears the edge. You're coming on the heels of this large candle with the most volume. It's not completely a Maribozu. What's a Maribozu? That's a good one. Let's go into that. Maribozu, right? It kind of, what is a Maribozu? It reflects that in whatever particular time period you're watching, 15-minute, hour, 6-day, whatever you look. I don't know if that's a real one, but whatever time period you're looking at, that whatever force was in control for the entire period. So think about if you jump, if it jumps off the cliff, and then you have to just, before you hit the ground, that's the whole range. It's just full force bear. Or if it's like a rocket ship going up, there's just full force from beginning to end. So that's what a Maribozu is. And it suggests, in general, it suggests continuation. It suggests a couple things, many things. So that's a Maribozu when I say a Maribozu. So a candle, a Maribozu, and this is not a Maribozu, but a candle of this size, of this real candle. This is called a real candle body from the open, right, to the close, right? We opened here, closed there. The size of this real candle body suggests continuation, all right? It also gives you a reference point for resistance. The resistance on a candle like this with this type of volume, based on candlestick theory, will be at the midpoint and going up, but especially targeting this midpoint. Same thing is true on bullish candles. These are general rules based on the size of the body representing the force behind it and the volume behind that force, and kind of just a mean average when you have the midpoint of the candle. So when I've been watching as a level, which it's going to take some energy to get there, some bull force to get there, would be the midpoint of this red candle for resistance. I would definitely keep an eye on that. To get there, I mean, you don't know what it would look like because you'd have to be so high above the Bollinger Band right now. In fact, that allows me to talk about how tight the Bollinger Bands are. If you're a Bollinger Band trader, which most of you are, this is called a Bollinger Band pinch. And this happens when you have a period of stability, most often followed by a period of instability. So you have a move, you have a price movement, and then you have consolidation. So in your mind, think about what a bull flag looks like or a bull pennant. You have your big move, and then you have your consolidation. You have maybe your equilibrium, the higher lows, lower highs, and then you kind of work your way through a consolidation. If you go long enough, if you take long enough, what's going to happen is those Bollinger Bands will start to come back together again. The longer that consolidation period goes before deciding what direction to break is the more time it allows those Bollinger Bands to catch up. So it's like someone who's a sprint runner. They sprint, and then they need to take, they start walking. And after, it takes them 5 minutes, but then they can sprint again. That's the same concept with these Bollinger Bands. These Bollinger Bands are saying we are ready for volatility. It often is a precursor of volatility, a precursor of movement. It's called a pinch. People like to say it's going to be explosive, and then they want to tell you which direction it's going to go. So they have the Bollinger Band pinch, right? We have the tweezer bottom, tweezer top. We have tweezers everywhere. Right, I put out some tweets, had a lot of people wondering what were and were not tweezers. A tweezer does not have to have the same upper shadow, either in construction or exact level. It is to represent the price action such that in both of those periods, in both of those candles, the bulls tried to advance and were rejected at the same area, the same place, an established area of supply. It's saying that's where you can buy it if you want it. Okay? Right? It's saying this is resistance. And the tweezer, if it's off $5, kind of $20, it depends on the time frame we're looking at. But this is a daily tweezer top, tweezer bottom here as well. It's not the same bottom. You don't have to have a big candle with a harami. It doesn't matter what the real candle body does. You do not need. I have to sneeze. Hold on. Tweezer top, tweezer bottom. A little bit small here for you to see. I apologize for that, but it do not require the same candle body. Like here, you see these two spinning tops. It is about the shadows. It is about the low of the day or the high of the day, and that's what's important in a tweezer. Tweezer top, tweezer bottom. Okay, now we're sniffing around a couple dojis. This is a new candle, so we don't really pay attention to this doji. We have doji spinning top. We're seeing small candle bodies. We're seeing here's what we see. What were we talking about before? We're talking about a reduction in force. You had a larger real candle body in the second candle on October 7th. But then you have what happened to the green force, and all of a sudden this bull force disintegrated, and that's what we're seeing. We're seeing a disintegration of the bull force. We're seeing upper shadows. These upper shadows come kind of in the same area of these upper shadows. I think the onus is on the bulls to prove that this support will not be retested, right? Especially higher support near the lower Bollinger Band, right? The onus is on bulls. You tell me why bulls do not retest the lower Bollinger Band, right? Okay, I'll counter argue that. I could say, well, Big Cheds, there's really no volume on the sell-off candles here. That's a decent point. But still, what preceded that, what came before that was the bear advance. The bear advance consolidation. You have let's just back up, okay? Bear advance, okay? A little bit of negotiation. Ooh, we got our double bottom. We bounce, run into trouble. Bear advance. We have a bear advance now for, what is that, like a week and a half. You have a bear advance. For from a week and a half, basically after this tweezer. 1, 2, 3, 4, 5, 6, 7. Yeah, week and a half, okay? In response to that week and a half bear advance, you have a 2-day bull advance and then this. So it's not exactly bullish. 2-day bull advance, spinning tops, kind of just just got rejected there. MA20 pulled back. All right? I mean, you're trying to hold the EMA8. Okay, that's fine, but you're really not really showing any bullish strength. I just think you have to assume, and we haven't even looked at the oscillators yet. So this is just based on candles. You see the Bollinger pinch on the heels of the bear move, tweezer top, tweezer bottom, but you have these upper shadows here. I just got to give a little edge to the bears to pull back and test support. There's nothing here that says bulls should advance. Let's just look at these oscillators, and then let's get back to your question. So, could I look? I'll look at XRP. Sure. Let's see. XRP. I'll get to that in a moment. So let's take a look at these oscillators. So the on-balance volume is just seeing continued weakness. We are getting a little bit of bullish divergence with the higher lows of the RSI versus price. You want to calculate this with the close of the candle. So you want to go to where you start, right? You want to start the trend. Even if you could start the trend here, it makes it worse. But if you want to be a little bit you want a little more objective, you start it here. And what you have essentially is a flat low with the rising lows of the RSI. So it's like a little bit bullish, but I don't get excited for RSI bullish divergence. Okay? I don't get excited for RSI bullish divergence. I want to see the OBV rising. Why? What is a scenario? Imagine a scenario where the price is pulling back and you have a series of flat lows. Let's take this exact candle construction. And let's say, so the OBV is basically a summary, an accounting total of the volume behind the green candles and the volume behind the red candles, and kind of that relation. It will tell you who's in charge. And so imagine you have these candles with these flat lows, this triple bottom, but you have the OBV rising. Why would that happen? That would mean that there's more volume on the green candles than the red candles. So a lot of times if you want to know if a move is real or not. Like you can have a move maybe on like a shorter time frame, especially, and if the price, let me try to make this point more succinctly, more clearly. Let's say the price is here and the price makes a big advance. Let's say like a normal candle's this size or something, right? Let's say the price makes a big advance, but there's not a lot of volume behind it. That's kind of a weak signal. You could think perhaps the price is pushed higher to trap people so they can short it, but it's not like a retail driven or accumulation driven type of move. So what you want to look for is you want heavy volume on these green candles. I'm not seeing it, right? I just did an alert for FET on for Bitcoin Live, and right, what was I looking for? So daily chart. Look at this volume. Let me get in there. Okay. Look at this volume, right? So before this candle, right? Look at all this volume. The price really isn't even doing much. Like that's accumulation. That's loading. And you see that reflected in the OBV. What did the OBV do before this? It was just skyrocketing. OBV skyrocketing, and then lo and behold, you have like a massive move today. It's just volume. So it's like you want to pay attention to on-balance volume. And you want to pay attention to candle construction, and you want to pay attention to what the on-balance volume is telling you. All right? That's critical. Let's see. You guys have any more candlestick questions? I'm going to take a look at XRP, and then I'll wrap it up unless there's some more candlestick questions. Let's go XRP. Let's go BTC pair. Kind of mixed. Obviously, you'd have to give, just based on candles, just looking at this objectively, you have to give bulls the edge right now, kind of short term, in terms of what's going to happen right here, right, per se. Let's go daily. But what concerned me is the 12-hour. We're talking about I was talking about the OBV. Right? So here we have, what do we have here? We have the bulls advancing, making higher highs. You have them breaking through a very key level of resistance. So this is also why bulls have to still have the edge right now. You broke through, so principle of polarity speaks. What it basically says is when you break support, it becomes resistance. When you break resistance, it becomes support. So now we have these levels that need to become support. They were established levels of resistance. The highs from July here in the 12-hour. We have the highs from the end of July. Pulled back. Bulls made a real nice move. This would have definitely been your fifth wave. Swing low to the swing high in September. You pulled back, made a higher high candle close. Even candle wick, and then you did the same thing, and it looks like a bull pennant right now. But what you have is, this is why I have a little bit of mixed feelings. What you have here is the flat highs or a little bit slightly lower highs in the OBV versus price. So I'm a little cautious on that, but I'm not putting so much faith into that because I can look at this one high wave. This is called a high wave spinning top, right? So this is a high wave spinning top, small real candle body, long upper and lower shadow. And the fact that it's a red candle and there's so much volume beneath it, I think is impacting the OBV because it was almost like a wash. It was just a lot of consolidation right here, but it still was a lot of volume in that range. So it's like this is just an abnormally type of candle. Like it just throws this whole price movement out of whack. Like it really overweights everything. So that's why I'm discounting the OBV bear divergence a little bit. But you have to say bulls are in charge right now. That being said, there's a ton of resistance overhead. Just because it's been downtrending for so long here on the BTC pair. We can look at USD. Clearly, we're really right in this is key range. You do not want to fall back below this. You're back testing that support. RSI is cooling off nicely. A little bit of bear divergence with the RSI, but it's not. It's a nice way you can see this actually. In strong uptrends, you can keep doing this for a while. So that doesn't necessarily concern me that much. Looking at the volume candles, healthy volume in the way up, decent volume in the consolidation. You see the declining volume trend. So, generally speaking, so you would think the point of the declining volume trend is maybe within the next day or so, you should see this kind of pattern resolve either up or down. So, all right, last one, Renee. I'll do ONT, and then I want to wrap it up. ONT ontology. Yeah, so I want to talk about that engulfing because that's a good point, Cornholio. So ONT, I mean, potential for an inverted head and shoulders. You can see it on larger time frames. Neckline, near the neckline area. OBV looks pretty good. I think it's a decent, healthy potential bottom here. I think you have to watch your rising support. You do need higher lows, so you have to kind of pay attention to that. Start watching short-term levels like that. So you got to pay attention to your higher lows. Let's talk about bullish engulfing. I'm going to wrap it up on Bitcoin. This is a great point. I want to emphasize this two-candle combination right here is technically a bullish engulfing, but it's really a bad example. It's not what the point of a bullish engulfing is, and I'll show you an example. But the whole point of a bullish engulfing is is the whole core message theory behind it. The price action that it's trying to represent is that you have a prior force that is so drastically engulfed by a reversal force. Okay, you have that big, you have just a small, downtrend, then boom, big green candle engulfing it, or in reverse. When you have two similarly sized real candle bodies here, it's not a very strong bull signal for that reason, that they're similar candle body sizes. Secondly, what is critical is you want to have certainly more volume, which you do, but it's barely more volume. You want to have at least 1.5 times more volume. Ideally twice as much volume for a strong signal. This is technically a bullish engulfing, but it's like not a good example in that you can put a check mark in a book. Yes, it's bullish engulfing, but you shouldn't take a signal from it. You shouldn't glean anything from it other than that it's a weak signal. Like even in this example, in my opinion, this is still, I'd want to see a smaller body. But this shows that at least this looks like it's about double the size of the real candle body, or close to double. Yeah, I'd say close to double the size. This one's slightly bigger. Here's another picture. Right? And you see mother. So you see mother bar. So when you have like a harami, also kind of the same concept where it's like a bullish engulfing in reverse, right? It's a bullish engulfing in reverse because you've got a huge bull force and then you have all of a sudden these small real candle bodies. So it's kind of in the sense, it's that same concept that we're seeing in the BTC daily, in the weekly rather. We have that big red candle body, then the small red. It's not quite a harami because it didn't close within the body, but you have the same concept of force as illustrated by the size of the real candle body. So when you're talking about a bullish engulfing, you want to be looking for like ideally double the size of the real candle body or close to it. And then that makes sense because you've engulfed you're larger than you're just completely. It's just like you just smothered it. It needs to be so big and powerful that it's smothering the prior candle, and that's kind of the concept behind it. And when you look at the daily, it's not. You don't get that. Oh, it's so powerful it smothered the prior day. I mean, you already see that in the follow through. The second day was weak, and essentially, I mean, it doesn't prove it, but it sort of confirms that. I mean, it's not a strong signal. So that's a bullish engulfing. That's how you want to treat your bullish engulfing candles. So I hope you've all enjoyed this stream. I don't do them that often, but I hope you can join me when I do. Please subscribe to me on Twitter, on YouTube rather. I'm on Twitter at Big Cheds, of course. I'm on YouTube at Cheds Trading. I am one of the founding analysts at Bitcoin Live, the best-in-class educational platform for crypto. I'm part of a great team over there. We're dedicated to putting out unique content, timely alerts. I love putting out videos where I talk through my mindset, what I'm thinking about, how I'm approaching everything. And I like to teach you. I like to get your feedback. It's just a project I'm really proud to be involved in. Please find my webinar on this channel as well. Just so you know, we have added a monthly as well as a quarterly option for you to try out the platform before committing for a full year, which I think is a great value, a great option. If you have any questions about that, please do let me know. And if you're looking for a charting site, definitely check out Trend Spider. That link is in my YouTube page. And I also, if you're looking for a derivatives trading platform as well, definitely check out Dudex. See if that works for you. That is my pinned tweet. But like I said, I want to thank you all for joining me. I hope you enjoyed this. I love Japanese candlesticks. I love trading. I love working with you folks, and just happy just to be part of the picture. So thanks again for joining, and hopefully you know where to find me if you have any questions. But we'll talk soon. All right, Big Chet.